Scott Martin here. Today we're going to review some of the accounting methods that we use in order to determine gains or losses when you have trades or disposals of any of your crypto assets. Let's jump right in.
There's three accounting methods. Now remember, these all sound like cute puppy dog names. So nice mnemonic. FIFO is first in, first out. We have LIFO, which stands for last in, first out. And we have HIFO, which is highest in, first out. Let's take a look at some examples here. We're going to take a look at a purchase history for a fictional crypto trader who is trading only in Ethereum or ETH, as you know, a very common token out there. Our fictional trader started out with 10 ETH, purchased in September of 2023 for a price of $1,600, resulting in a basis of $16,000. Second purchase in December of 2024 for about $4,000, giving us a additional basis of $40,000 for that. Third purchase of ETH is going to be 10 ETH tokens in July of 2025 for about $2,900, or totaling $29,000 in basis for that. So total basis of all of our purchased ETH is about $85,605. So what that is our basis that we're using. And again, basis can be complex, but this is the number that we're going to use for amount that we have invested in ETH. Okay, now we've got our first sale event. On November of 2025, we sold 10 ETH at a then price of $3,449, giving us total proceeds of $34,491. Now, remember, proceeds are not gain or loss. They are just proceeds, the amount of money that you sold your property for. What's the gain and loss on this transaction? Now, how are we going to apply the basis to determine the gain or the loss? That's the whole point of these accounting methods. Let's use FIFO first. Now, remember, FIFO is first in, first out. What we're talking about when we say first in, we're talking about dates now. Okay, so what we're going to do is we're going to apply the first purchase of ETH against the proceeds in order to determine what the gain or loss is. In this case, we don't need the 2024 purchase or the 2025 purchase, which leaves the first amount that we purchased back in 2023 of $16,000. That's the basis that we're going to apply against your sale proceeds. That gave us a gain of $18,201. Okay, so now we know our gain based on the FIFO method of accounting. So let's go to LIFO now. LIFO is last in, first out. Now remember, we're also talking about the dates here. We're not talking about anything else. So what is the last purchase that we did? And that would be the July of 2025 purchase. So we don't need the previous purchases. We can just get rid of those. And so we're going to apply $29,000 of basis against $34,000 of proceeds, giving us a gain of $5,400. Now you can see there's a vast difference there between the actual gain determined as FIFO, which is much different than what we determined using the LIFO methodology. All right, let's take a look at what our gain or loss is based on using the HIFO accounting method. All right, so HIFO has nothing to do with dates at this point. We're talking about the price that you purchased it at. So in this case, the highest purchase price, remember it's highest in, first out, is going to be that December of 2024 purchase price of over $4,000. So what we don't need to look at anymore is that initial purchase, the first one we did, and the last one we did. So the only purchase proceeds that we have left based on the HIFO methodology is the $40,000 basis for the purchase we did on December of 2024. That gives us a $5,000 loss using the HIFO method. Now, that's one of the most amazing things about using the different basis determination methods is that we have such a large swing between what our gains and losses are. Let's take a look at that in the summary table. All right, looking at all the different gain and loss numbers that were determined using the different accounting methods, you can see that the swing is huge. There's a $23,000 swing between the FIFO methodology and the HIFO methodology. So using the different accounting method can make a big difference on the gain or loss that you are going to report to the IRS.
Now you have to remember, once you choose the accounting method, HIFO, LIFO, or FIFO, you're going to have to keep using that indefinitely. But you can see how there's such a wide difference in results depending on the accounting methods you use. We'll keep you posted.